Bitcoin has made quite an aggressive move towards the downside, breaking down from the rising ascending channel formation we were developing over the course of November and early December. This downtrend thus far has broken through the $17,000 support and is pushing into the upper $16,000 range. We're going to go ahead and take a look at the charts today and talk about whether or not this downtrend will continue to new lows or will it bounce and find support. Let's go ahead and jump into the charts. Okay guys, welcome back to the channel. Thank you for tuning into today's video. I hope you're all having a fantastic day. We're going to go ahead and jump into Bitcoin today, talking about the short term, the larger time frame, the price direction, the breakdown from the rising channel, and of course, the technicals. We'll discuss absolutely everything in today's video, so be prepared for that. Now, if you did watch our prior video 2 days ago, which we took yesterday off, you would have known that we were expecting a breakdown from this rising channel. We explicitly said on the channel in the video, you can look for shorts if that trend line breaks. And since there, we have seen quite a significant drop for Bitcoin, around 3.5 currently and 4.6 in total. Now, before we get into today's video, guys, smash the like button, hit the comment button, and subscribe to the channel for daily analysis and updates on Bitcoin. We focus on the charts, we focus on the data and the technicals alone, nothing more. As well as joining our Telegram channel, which will be the second link in the comment section down below, the pinned comment section. Get updates on all of our charts, news events, analysis, and a whole range of more stuff over here. If you're interested in VIP, the VIP trading channel will start up on January 1st once more. Let's go ahead and jump into the market data. So starting with the monthly, we can see Bitcoin is back into the red. We're down 2.58%. There was a period of time where we were pumping into the green. We're up around 3%. Of course, we were approaching that 18,500 level, but of course, we got heavily rejected from that June to November resistance range, and now we are back in the red. So December is looking quite ugly. Of course, with 12 days left of the month, we are down 13.86%. For us to turn this quarter green, the price of Bitcoin will need to reclaim 19,200. That, of course, is quite some ways away. We are currently sitting at 16,700. So see a 13.28% rise, we're going to need to get just above $19,000. So quite some ways away. Looking at the liquidations, we can see the liquidations in the last 24 hours are very low, and we can see via price action, there has been quite a decent amount of consolidation and compression sideways ever since we saw this price drop into that POC level, which remind you is at around 16,550. You can see it on the chart over here represented by our red line on the VIPV. So we saw that volatile and quick move down to the POC. We bounced on the POC, which of course stands for point of control. Point of control being historically the highest range of trading volume within a horizontal range. So this area here, in relation to all of the price action that happened within the price range on the screen, within our view, this particular particular horizontal range had the greatest amount of trading volume, and therefore it is the point of control represented by the POC line. And again, these levels generally indicate points of potential resistance or support, as historical trading volume does tell us, or does help tell us, where points of reversals or bounces or resistances or whatever can be found, as higher volume, higher orders, higher trading volume represents more resistance, more support, etc., etc. So generally what we see after we bounce the support range, we start to see the price start to slow down a little bit, because it's making its decision of whether or not it's going to reverse or whether else it's going to consolidate above this level and then continue down. And that's why we're seeing liquidations drop, and of course, as liquidations drop, we know volumes drop, because with lower volume, lower liquidations, lower volatility. And of course, we have seen that for the volatility right now. We've seen a little bit of a spike in the volatility, nothing too significant, but that spike is basically backtracking this entire move towards the downside. So in terms of volume, it's quite low now, and that is expected after we've seen such an aggressive move towards the downside. We're seeing some degree of consolidation. So before we get into the Bitcoin analysis, let's talk about the rest of the markets. So DXY had a breakout of that falling wedge pattern, like we said was going to occur. The key level was this horizontal range here. Of course, the DXY is closed right now. It will open up, I think, in a couple hours, not too long now. Opens up on Sunday American time, and it is currently Sunday Australia, so not too long now it will open up at the end of today, essentially. So we are going to see the DXY open not too long from now. And of course, if the DXY does open up green and it remains above this horizontal support, we can expect the DXY to rally back upwards into this next resistance range. And of course, as the DXY rises, asset prices continue to fall. So the DXY is looking inherently bullish over here. S&P 500 and Dow Jones are into their major supports. You can see the Dow Jones actually broke into that major support range. We said that move was coming if we lost this local low. We saw that move towards the downside. The next support level, of course, was this horizontal level here, represented by this chunk of support that we did have placed between 32,986 and 33,548. Currently, the 50 EMA is crossing just over that wick. If the price does actually lose this 50 EMA, we can see a continuation back towards the conjunction or the junction point between this diagonal and this horizontal around 32,000. So more downtrend can actually resume. The markets go ahead and open red and the DXY opens green. We can expect more blood to come into markets. The same thing goes to S&P 500, guys. We're pushed down, a heavy rejection once more from that bear market resistance. You can see the bear market resistance being that descending, expanding wedge. We have broken into and just below the major support zone. S&P 500 is slightly showing us some leading signs of a continued crash over here. If we can see, we can potentially see a price drop back into these low levels over here. We're looking at potentially 3,724 and we're looking at potentially 3,644, these two levels. So it's not looking amazing again. For us to start looking good, we do need to break back above this 4,100 level. We need to clear this local high we actually printed on the 1st of December. That will trigger a continuation up to the major resistance level we are looking to break for the bull case to then take into effect. Until then, very much still in a downtrend, not looking amazing. Here is the bond yield. So 10-year government bond yield still in this falling expanding wedge pattern. Again, we do expect a reversal at the end of this. And again, the 2 years in a falling wedge pattern. Again, these are closed markets right now. We can see what happens when they're open. Again, a falling wedge is more likely to break to the upside. Breaking over this 4.4% will result in a continuation higher. Let's go ahead and jump into Bitcoin. So we'll start with our structural analysis, then we'll jump into a technical analysis, and then we'll jump into the macro. So structurally, Bitcoin is looking really bad, okay? There's absolutely no doubt in anyone's mind that Bitcoin is looking bad right now. It's very obvious Bitcoin is looking bad. First and foremost, very bearish rejection from the June to November low. This was a key level we're discussing over the last few weeks, a level that we're most likely going to find support or resistance at, a level that was going to determine whether or not we're going to see a swing upwards into that 19,000 POC level, or reject and continue towards the downside. Of course, we actually did retest that level on that CPI release, and we did get heavily rejected. Sorry, FOMC release, and we got heavily rejected from that level, which was around 18,300. For those of you who know a little bit of TA, you would know this is called a support resistance flip. When prior support becomes resistance, okay, and we get that initiated and basically reenacted as a resistance. Now this level is a very strong resistance, okay? This was a very strong support. The 4 to 5 month long support is now a very strong resistance. It becomes equally as strong to the downside. So we are underneath a very major resistance. Before we can start looking to any sort of bullish scenarios again, we will need to clear through that level. There's absolutely no doubt we have to get above that level. So talking about the bullish scenario really quickly. Ignore the short term, ignore these trend lines really quickly. We're talking about the bullish scenario, and then we'll go ahead and jump into short term again real quickly. So we are in a falling wedge pattern on the macro over here. So a falling wedge pattern is essentially a bullish pattern. We do expect a bullish reversal to occur at some point, potentially after the breakout of this pattern. Now, what is stopping us from retesting this downward trending resistance? We have a few things. We have that June to November low, which we did actually reject from, as well as we have the VRPV, which is sitting around 19,000 for the POC. So just above us, we have the horizontal with a point of control on the larger time frame, and we have this downward sloping resistance level. From a structural standpoint, those are the points that we do need to clear above to actually flip this downtrend. And this downtrend is in fact the macro bear market resistance. As you can see, points of resistance across this diagonal line up with our 3 key points of resistance, all of which happened to be either under the 50 SMA on the 2-day or below this diagonal trend line, while the RSI was in a weekly consolidation pattern. So we do know that every single one of these points here, and here have been confirmed from 3 different angles: momentum, average price, and structural price, to confirm these points of rejections, and this diagonal trend line, in fact, is our bear market resistance. So that is from a structural standpoint. From a technical standpoint, like we said before, we are looking for a few things. We're looking for, again, number one, the structural validations need to be met, which is the breakout of the June-November resistance, the POC level at 19,100, and the diagonal resistance of the falling wedge. Number two, we need to get above the 50 SMA. As you can see, the 50 SMA is pushing into the 18,000 range, which is a must. We do need to break the 50 SMA. And number three, should I say, is the weekly RSI over here. So we take a look at the weekly RSI. We have a falling wedge pattern. We will need to break free of that falling wedge pattern on the weekly RSI to confirm a momentum shift. When we see all 3 of those things occur, okay, we can be more certain that reversals occurred. Until then, we are still in a downtrend, guys. We are still in a downtrend. We have got rejected quite aggressively, okay, quite aggressively from the June to November bottom. The June to November bottom, quite aggressive downtrend. We developed a rising channel formation over the last 2.5 weeks, okay, which took us to retest that high. From there, we have rejected from the rising channel. We have broken down from the rising channel. We go ahead and do a structural measured move. We can see we haven't completed that measured move yet, but that doesn't necessarily mean this move is over. We generally see measured moves take us as a range to the next key support. The next key support was a POC. We saw a direct support test on the POC level, which is about a 4.6% breakdown, and we are currently retesting this upper support, now resistance range, which is around about this 16,780, okay, to 16,750 level. As you can see, a red candle has been printing within this range, indicating we are potentially doing a smaller time frame support resistance flip on this level before we see the next leg down. The next leg down should take us to the 16,200 level. That is our target. I do not expect any sort of larger time frame reversal until our macro validations, which described before, have been met. Until then, we should expect this trend to continue downwards. Can we see small time frame bounces? Absolutely. Can we see small time frame swings? Absolutely. Could we see a swing back to 17,000? We'll take a look. Absolutely. But the trend is very much downwards. So let's go ahead and take a look much deeper. Let's really jump into the smaller time frame, discuss what is happening, and then we'll do our technicals and talk about the trend strength. So let's go down to a 30-minute chart and take a look at what is happening. So we'll ignore the technicals for now. We'll come back to that in a second. But from a structural standpoint, of course, we have a few things that are very key that we're going to be looking at. We have a new downtrending resistance line. This downtrending resistance line is, of course, from that local top in December 15th, 16th, and drawing through. It looks like we have actually broken through that downtrend. So what does this tell us? Well, it tells us this downtrend has been broken. But we do have to look at the smaller time frame patterns to determine whether or not this downtrend break has been validated or is nothing more than an extension from the current smaller time frame pattern, the micro pattern, which we're developing in. So what we can see, we are in a rising wedge pattern. So a rising wedge pattern is a bearish pattern, indicating a reversal downwards is more likely. So we do expect this point here to be acting as resistance, and we can expect a rejection to occur from this point until this local high at around 16,777 has been reclaimed. What do I mean by that? Well, I mean you're looking for shorts until this level has been reclaimed and your targets are these lower levels, okay? That is what we expect. We expect a downward continuation until this upper level, okay? You can see this is support over here, has been reclaimed and retested this support level as support before we continue for a reversal back upwards. Targets are, of course, these upper and lower levels of the support ranges, okay? We do expect that breakdown to occur from here on the smaller time frame if this uptrending support line, okay, which you can see I've retested 3 times now, is in fact lost. We will see that continuation that will most likely clear out these absolute lows and lose that POC level. So on the smaller time frame, from a structural standpoint, again, it's validating that this support level has been lost. It's confirming and telling us, all right, if support level's lost, for us to see any sort of move upwards, we need to see the support level reclaimed. Until then, we are in a downtrend, okay? That is exactly what the charts are telling us. They're telling you straight to your face, that is what's happening. When you can read the charts, it becomes very, very obvious exactly what's occurring. And the charts don't lie, guys. The charts don't lie. They tell you everything you need to know if you know how to read them. So breaking through that level, we get a short-term swing. That short-term swing can take us up to 17,000. Absolutely it can, okay? But until we get a validation that this support level is no longer resistance and it is in fact support, why would you be expecting a swing upwards? You wouldn't. You shouldn't, okay? You're betting against the trend. Do not bet against the trend. Let's take a look at the technicals. So looking for an honest, reliable, and accurate exchange that you can trust to trade on, go ahead and sign up to Bitget with the link down below and join myself and all of our other VIP members and other members who trade on Bitget daily. There's a whole range of benefits and features you can actually get by trading on Bitget. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures. It's one of the lowest in the game. And most importantly, access to their protection fund in case the exchange gets hacked. You can actually get reimbursed for your funds so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to $4,163 in rewards and access to the MegaWhale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. What we'll do is we'll go ahead to this chart and we'll start on the smaller time frame. We'll go ahead and delete everything and we'll go down to that. Let's go to our 4-hour chart on a smaller time frame. See what the technicals are saying. So from a technical standpoint, we have lost our 50 SMA. Not a very good sign. Of course, on a 4-hour, we have had a lot of consolidation within this range. So we are going to see a lot of fluctuation in and out of that 50 SMA. We're going to have to go to a larger time frame to really see how it's smoothed out. We'll go to a 12-hour and take a look. From a 12-hour chart, we did see a lot of compression and consolidation just under the 50, but above the smaller time frame moving averages for quite some time. We saw an expansionary move upwards. We saw a long-legged doji candle indicate a reversal or a strong reversal was going to occur. We did see that reversal occur and we pushed back below that 50 SMA. The 50 SMA is sitting around 17,200, which by no surprise, guys, is in fact one of our resistance levels. You can see this resistance level here is at 17,200 level. Okay, no surprise, it all lines up quite well. So we are very much in this downtrend. It is very, very abundantly clear. If we go ahead and draw our trend lines in once more, we have lost these trend lines, we have lost our downtrend. We go ahead and draw this trend line in here. We can see we have even lost this downtrend over here, or this uptrend over here. So we're very, very clear that we are underneath these trend lines now. This downtrend is active. Going to a larger time frame, 1-day chart, we can see we are underneath the 50 SMA. We have rejected from the 50 SMA, not only the 50 SMA, but we have also rejected from and lost our 4, 15, 17, 22, 26, 28, and 32 moving averages. So even our smaller time frame movers, we are underneath, indicating an aggressive downtrend is in play, or this trend is very negative right now. Bull market support band, we have lost on the daily. It is even flipping bearish, meaning the red line is crossing under the green line is crossing under the red line over here, indicating a bearish cross on the bull market support band. Not a good look. Going to a 2-day chart, we can see the price action is actually sitting directly underneath the bull market support band. Again, not a very good look for the bull market support band. Bringing up the Gaussian channel, we can see a few things on the 2-day. Of course, we had a rejection from the Gaussian channel once more. Again, we've seen a few rejections now on the Gaussian channel. 3 out of the last 4 have rejected from that lower band. Only 1 of the last 4 have actually pushed into the mid band and actually touched and rejected the mid band. Again, looking for these breakouts on the Gaussian channel, a really, really ideal thing to do. We're looking for these breakouts, particularly when this Gaussian channel flips on the 2-day chart, breaking that midline. We have a very strong indicator that this downtrend, of course, has flipped. These are the kind of things you need to look for when you're looking for macro entries. You're not trying to get the cheapest price. You're trying to get the cheapest price possible with the least risk attached. So you need these macro confirmations, you need these validations that these trends are flipped. You need to wait for some of these highs to be taken out. Why would you be jumping into a macro position when we're still very aggressively downwards? we haven't even taken out any of these highs. We need to start breaking some of these highs, okay, before we get into these macro positions when we're talking long-term positions for Bitcoin, when you're talking about buying now, okay, we're talking about the lowest risk possible. We have no more structural validation indicating that we do have any support right here. We have short-term support below us. We have 15,000. Below that, our supports are sitting all the way down at 13,900 as well as $12,000, okay? Again, there's no guarantee we go to those levels, but if we do lose these lower time frame supports, particularly 15,500, you know, we are really on a fast track one-way express fucking ticket down to these levels. So we do have to be very careful about that. Furthermore, guys, Gaussian channel on the weekly chart. Let's take a look at that, because the weekly chart is quite interesting, and we do have quite a large gap here on the Gaussian channel, and it's quite normal to see, particularly after these long drawn-out downtrends. We generally see these expansionary phases happening on the Gaussian channel. There's nothing to worry about with that. It doesn't actually tell us anything bad's occurring. What we do want to be looking for, however, is when we start to see the Gaussian channel start to turn around. So we start to see this little divot in the Gaussian channel, particularly, you know, there's turning points in the Gaussian channel on the larger time frame would be indicating the macro trend is starting to absolutely flip towards a bullish trend, particularly as you can see how we have this downtrend turn to uptrend. It happens quite high. Bitcoin will rally quite some amount. We're looking at a larger time frame. That is what we're kind of looking for on the very large time frame to confirm any sort of swing towards upside. And of course, we've already looked at the RSI. We've already talked about that RSI downward resistance on the RSI, particularly that momentum shift occurring on the weekly that we're looking out for. So there's a lot to look out for on the weekly chart, particularly the larger time frame from a technical standpoint. There's a lot of validations we're looking for and a lot of key things that are telling us right now, you know, we are still in a downtrend. We're still getting hammered downwards. There's a lot of resistance above us. In fact, some of these resistance levels above us are significant. You know, we're looking at this, like we said, this November, June low area. Historically a massive resistance. We're looking at those POC levels sitting around, you know, this June to November level once more. Historically, massive resistances. You know, this consolidation zone that we actually developed between June to November, 145-day consolidation zone, is one of the larger consolidations within a time range we've seen on the Bitcoin chart. You know, we've seen similar things occur back in 2018. We've seen it occur back in 2019, a little bit in 2020, but for the last 2 or 3 years, we haven't seen such a tight consolidation actually occur on Bitcoin, and therefore, within this range, we have a lot of historical trading volume, particularly a lot of volume and orders placed within this area. And like I said, price and people purchase and price move based on historical price action. So if there's an area of which that previously had a lot of resistance, there's a very good chance that moving into that area again, there's going to be a lot of resistance once more. And that's how kind of resistances are developed, okay? So keep an eye on that, guys. Keep an eye on the charts. The short term's looking pretty bad. Validations to the macro, we've talked about directions to the downside. 4-year cycle once more. A lot of people ask me, Whale, when do you think the bull market's going to start? Well, according to the date ranges, I do believe the bull market is going to start around March 2024 to May 2024. And that is because if we take our local tops to absolute bottoms, we generally see about, now we're saying generally, because it's around about 12, 13 or so bars, okay? We usually get around 12, 13 bars. We take the tops to bottoms. We're usually around 12, 13 bars. So if anything is telling us this is correct, we should theoretically, based on the 4-year cycle on the bar period, be bottoming out this month, okay? Now, I do think there's a chance this can extend up until we're looking March, January, February, March, April. I do think we potentially see a bottom in March and April. I'll talk about that in another video, but there's a few economic drivers, particularly FX swap debt. You know, it's like $100 trillion in FX swap debt that could potentially push the economy and push the asset prices lower than what we expect, and more importantly, for longer than what we have seen in prior cycles. So that's something to keep in mind, and we'll talk about that another time. But let's just go with the 4-year cycle and the data we have available. The bottom should be this month in December. From bottom to top, we generally see between 15 and 17 bars. Okay, so bottom to top, we generally see that 16, 17 bars. Okay, so around 17 bars on average. Okay, and again, from bottom to top, we generally see once more, you know, 17 bars on average takes us to the midline. So we're looking at an average bull market to actually initiate between that March to May 2024 range. Now, that doesn't mean we're not going to see good price movements between there. As you can see in every single cycle, we have seen some strong moves towards the upside, okay? You know, before we even reach that bull market territory, you know, we're pushing up a decent amount. We're pushing up 300%. Okay, we're pushing up, 200%. Of course, we've gone down statistically in rate of return, less percentage this time, so that rise is going to be less as well. We might only see 100, we might only see 160 or something percent, but that still takes us over that yearly low level, which is our $30,000 resistance, which is our key level we need to break to confirm the deviation below that yearly low has been reclaimed and the trend can develop upwards again. Okay, keep that in mind. The charts tell you exactly what you need to see. There's nothing more you need than the charts. Look at the prior cycles. Look at the yearly lows, okay, on the prior cycles. Let me go ahead and delete some of this. Look at the charts, guys. Look at these yearly lows. I'm gonna go ahead and delete all this. Look at these red lines, okay? These red lines represent on the monthly chart the yearly lows of the prior bull markets, okay? This was bull market. This was bull market. This was bull market. These red lines represent the yearly lows. Where did the bull market start to kick off? It started to kick off when we broke that yearly low and found support. Broke that yearly low, found support. The same thing is going to happen again. And it's not because it's not because bull markets all act the same. Yes, they're going to start acting different, but price action moves very similarly. Okay, price action on charts move very similar. For prices to move upwards, we need to break through key historical resistance zones. And the key historical resistance zone that is a major one is the yearly low of the bull market. So breaking through this level, finding support is what is needed for a trigger to create any sort of uptrend. And again, there's no reason why we can't break it and then see a downtrend form again and then retest like we saw over here. Like again, we broke it, we pushed upwards like 200%, okay? And then from that 200% rally, we saw a strong move to a downside of 56% again, okay? And that lasted, we're looking at nearly a year, over a year, that downtrend lasted once more before we started to see a rally again. That can definitely happen. We can push upwards, we're looking at 70, 100% upwards, and then we can push sideways once more into the next bull run initiation. Again, things to keep in mind, things to think about. It's very hard to say for sure, but again, the more data you have, the more data you understand, the more data you consider, you're always going to be able to make more better, or should I say well-informed, better and more precise decisions. And more importantly, when you are wrong, because being wrong happens, okay, you are able to react and shift your position to align with the correct stance in the market much faster. And that's a big error a lot of people make. They jump into crypto. They think they're traders. They'll trade on the way up. Then they'll have bags that they'll end up just holding all the way down. And the reason they end up holding all the way down, because the accountability required to make informed decisions on when to sell, when to cut your losses, is too great of a decision for them to physically and emotionally bring themselves to do, because they haven't had a plan to do so prior to the drop. They were caught off guard. And when you're caught off guard, it's very difficult to make informed, rational and quick decisions that could potentially have lasting and long-term profound effects, okay? So with that being said, if you don't have a plan, you are literally planning to fail when trading. Take trading as a job, have a plan, have everything mapped out, have a variety of plans, I would say. And when those triggers validate, that is when you execute plan A. How I trade, I have plan A, B, C, D, E, F, G, whatever, okay? I have validations. What will it take for plan A to trigger off? What will it take for plan B to trigger off? What will it take for plan C to trigger off? I am waiting for those triggers. When trigger number 2 triggers for plan number A, I know, okay, I'm gonna jump and align myself what my plan was for number A and ride that trade, okay? Then within that trade, I have my backup plan. So you need to have a plan, guys. If you don't have a plan, you're reacting based on emotion. If you're reacting based on emotion, you are going to be wrong. Anyway, guys, I hope you enjoyed today's video. A little bit of a longer video because, again, I was not here yesterday, but I hope I caught everyone up to speed. I hope you had a great time listening. And of course, I'll see you guys tomorrow. One more thing, guys. Be aware, if you are in a VIP channel, and if you do want to join the VIP channel will have a sale, okay, an end of year sale at the end, well, closer to the end of this year, of course, New Year sale. And of course, the VIP channel will restart on the 1st of January 2023. I always take the last 2 weeks off. It gives me a bit of a break. Everyone's memberships have already been paused. Everyone who is joining between now and of course the 1st, their membership will only start to count down from the 1st onwards, okay? That being said, I'll catch you guys next video. Cheers.